Good afternoon and welcome to yet another TUG Connects 365 webinar today. I'm Gloria Nelson, your host with TUG, and as you settle in and get ready for the start of today's webinar, let me give a brief introduction for TUG, the usergroup.org, for both our current members and for those of you who represent organizations that are not yet our members of the TUG organization who are Infor distribution software users. We've all heard the phrase knowledge is power, and I can say with confidence that after today's presentation, you'll be waking up tomorrow with a little more of both. TUG webinars, on forums, and member events facilitate the timely exchange of ideas and information to help you work smarter and with more confidence. That's a powerful combination. And a quick heads up, TUG Connects 2021 virtual conference registration is now live. So after today's program, head on over to the webinar. After today's webinar, head on over and register today. If you're currently a member, it pays to get even more involved. And if you're not, please visit our website to discover why 2,300 heads are better than one to help you be the best at what you do. Before we jump in, I want to give a brief announcement with regard to intellectual property. Avalara has granted permissions to go ahead and take screenshots, and also you can copy and paste any of the chat content that might help you in terms of your daily job performance. Buckle in for about 35 minutes of content that includes engaging you. We want to just have everyone come out and join us in our polling, and also post your questions, open up your Q&A bubble. So not only you can post there, but see what other people are posted. If something you want to reinforce and get an answer on rather than duplicating the question, simply like it and it will populate that right up to the top. You also have the opportunity to post questions anonymously if you would like. And in addition, open your chat window, as Dame Edna would say, talk amongst yourselves, and Brent will be engaging with you there behind the scenes as well as I will too. So without any further ado, I would like to say it is our pleasure to introduce Jonathan Gliddens, Senior Sales Executive with Avalara. And as we jump right into the 2021 sales tax changes for Infor users. So I'm turning things over to you now, Jonathan. Go ahead and take it away.
Thank you, Gloria. So thank you, everyone, for sharing some time out of your busy day with us today. Where we're going to get started, I wanted to do just a quick introduction of who I am. So I've spent close to the last 20 years in the finance and tax technology space. In my time at Avalara, I've been here for 13 years now, and I've helped over 500 different companies achieve sales tax compliance through automation via Avalara. My background before getting into sales, I did spend about 4 years as an accounts receivable clerk. I've done IT technical support, as well as managed a couple of different channels in my career as well. So I'm hoping today that I'm going to bring some of that knowledge that I've gained over the last several years to help you with some of the things that we're going to talk about today. Agenda-wise, there's several topics that we're going to cover. We're going to talk a little bit about the impact of the COVID-19 pandemic on business, and more specifically, how it's impacted the manufacturing and distribution space. We're going to talk about some of the ways that tax revenues may increase in 2021. We're also going to talk about, just in general, a lot of noteworthy sales tax changes and trends in the market. We're also going to speak again about some of the specific industry impacts, manufacturers, distribution-based businesses. A lot of this is trending in the direction of lots of these types of businesses going towards retail or more B2B e-commerce. So we'll talk a little bit about that. And then where we'll wrap up, we'll talk a little bit about technology and automation through Avalara. So let's get started in kind of talking about the impact that the pandemic has had on business. So when we think about, what changed in 2020, probably the topic of conversation is what didn't change. My day-to-day changed significantly. I went from working in an office, 5 days a week, commuting on the bus into Seattle, to now, working from home for the last year or so. When we think about how business has been affected, certainly where folks are working and how those offices and those businesses are managing the processes today. Thinking about businesses closing, there were a ton of businesses that actually went out of business in 2020, which is super unfortunate. When we think about those other businesses that didn't go out of business, a lot has changed. Temporary closures happened, employees being furloughed temporarily or permanently. Certainly the way that customers had to transact business changed dramatically as well. When we think about changes to the business structure of how we sell to our clients, e-commerce was accelerated to a very significant degree in 2020. We do have some other details that we'll share on that later in the presentation. The other piece that the states have done, and that was a very temporary thing that the states have done. They did enact some tax relief in response to the pandemic and what was happening in the business community. When we focus specifically on e-commerce, a ton changed in 2020. As we think about the increase that happened on the e-commerce side, this was something that really accelerated growth by many, many years ahead of when it was expected. When we think about close to 100,000 businesses closing. That was just as of August 2020 that those statistics were run. That has been a really substantial change in the supply chain as well. So who folks are buying from, how those products are getting delivered, the speed or lack of speed involved in getting products, not only domestically but internationally. The COVID pandemic changed all of that in 2020. We also look at kind of decreases in brick and mortar. There was about a 14% expected decrease overall in brick and mortar retail type sales. Even, thinking about going to the grocery store today, most folks have kind of switched over to some of those pickup options. So it's no longer I go into the store, I buy products. Same thing as we're working at selling to contractors or other resellers, right? They may have been going into physical branches prior to this pandemic. They may now be much more apt to pick up the phone and call someone, or certainly as we're seeing a big trend going to more of a B2B portal to place those orders. We also look at just overall consumerism in the United States in 2020. There was more than a 50% increase in customers buying products online versus through those traditional sales channels. And then when we look at the big day, which it's always a big day, Cyber Monday, it was expected to be the largest shopping day in history in fiscal year 2020. So when we think about these changes, how does it matter to you as a manufacturer and distributor on the call today? Most businesses are becoming a little bit more savvy and saying, for the younger crowd, for folks that are not as comfortable to come into a branch and buy products, what does that e-commerce strategy look like over the next 1 to 5 years? And I think more and more businesses that I'm speaking with, they are then shifting in that direction of saying, wow, even though this has been on our to-do list, the e-commerce side of the business has jumped up in priority due to the way that folks are now buying and consuming products. When we think about the impact of the pandemic, not only did it impact businesses individually, collectively many industries were very impacted, but then overall the states were also impacted as well. When we think about how that tax revenue is generated, tons of things changed in 2020. Travel and recreation went down a ton. Folks spending more time at home, that was the general trend that we saw. So when we looked at that, more people were cooking at home and not going out to restaurants. They were not taking their normal vacations that they were taking. So from that standpoint, state revenues that are generated by sales tax were impacted pretty significantly in 2020. I think the estimates were such that they thought that there was going to be a much bigger impact, but they based on estimates at the end of 2020, they thought that it was going to be over $500 billion in impact over 20 and 2021. So time will tell to see how the states have bounced back. In kind of thinking about your business today, let's get the group involved. We're going to actually go ahead and launch the polling question through Gloria. Gloria, could you launch that for the audience today? And let's go ahead, we'll read through the question. If everyone could participate in the polling, we would greatly appreciate that. But the question is, how has COVID-19 affected your business? First option is employees working remotely, business temporarily closed, businesses under restricted capacity, the business has shifted to online selling, the business has grown, or no change, business as usual. We do understand that some of these, more than one may apply, so choose the one that the most closely resembles the impact for 2020 for you. And we'll keep the poll open here for a few seconds. We want to make sure we get some good combination of answers here to review. And while we're chatting, just as a reminder, Brent's also managing the Q&A. So if any conversations come up that you'd like to address further, definitely let us know. So Gloria has shared the results here. So looks like the most popular answer, about 70% of the audience says that employees are now working remotely. We had about 9% say that business is under restricted capacity. We had about an equal share, 9%, the business has actually grown, and then about 13%, really no change, just business as usual. Thank you again for participating. We really appreciate that. So let's talk a little bit about some of the ways that states may increase their efforts around tax collection in 2021. One of the ones that has been kicked around a lot is really broadening the base of what products and services are to be considered taxable, ones that traditionally have maybe been exempt depending upon which state you're selling into. When we think about a couple of examples of these, groceries is a big one, right? Most of the stuff that we buy at the grocery store, if it's staples, things that we need to survive, generally the states are very generous and we don't get charged sales tax on that. Some of the things like soda pop or some of the more luxury items that we might buy, there could be some tax involved in that. But a lot of the states are looking and saying, do we want to increase and really grow tax revenues by way of impacting things like groceries? When we look at Wyoming, last year in 2020, they proposed this and it was actually voted down upon introduction. So this is something where the states have looked at this and said, well, we really don't think that this is something that we can pass based on the reception that it's been given from the community. The other piece on this is digital services. So when we think about software as a service, digital apps, digital content, there are states like here in Washington that we already tax that stuff. But there are a lot of states where those types of digital services or even digital products are not taxed. So if we look at last year, Maryland, Nebraska, New York, a couple of others, they actually proposed some taxes on digital advertising. They as well were unsuccessful in passing any of those new legislation pieces. So as we look at this as a potential option, I think more states are going to look at this and say, is there the opportunity to tax on things that we haven't before? I think one of the other glaring ones that really impacts potential manufacturers and distributors is if you have any types of services that you do in the business as well. So that's something that's been being kicked around as well. Also, and this is this was a big change as of June of 2018. There were new remote seller laws that were passed after the Wayfair versus South Dakota Supreme Court case. So what we're finding is that more and more states are actually increasing efforts to identify who are the remote sellers that should be collecting that are not today. Now, in my day-to-day conversations with manufacturing and distribution-based businesses, I do feel that this industry is a bit behind the curve on understanding these new laws, not only what's required of them as a business, but also what the short and long-term impact of not complying with these new laws may be. Just to give you a little quick bit of flavor on this, just because you sell through, even exclusively resale channels, there are states that would look at your gross sales number and say, if you're selling over a specific amount in gross sales, either revenue or a specified number of transactions, even though you may have zero sales tax that you're collecting from your customers, they still may want you to go ahead and register and become a taxpayer in their area. When we think about what's the impact if you don't follow these, if you get caught by the state, they're generally much less willing to work with you versus if you're proactively going out, addressing your potential obligations around remote selling economic nexus rules. So that's one of the reasons why we really talk about this and say from a best practice, really focusing on, do you have these potential obligations that you didn't before this decision? It would be very prudent to address that proactively versus reactively. When we think about these new economic nexus laws, just about every state in the union has these now. The states that you see on the graph in yellow, these are states that don't actually have a state sales tax, so Oregon, Montana, and the others. The two that do have a sales tax that have not passed legislation is Missouri and Florida. An example on the right of the way that these vary has been presented. The Wayfair versus South Dakota Supreme Court case, the basis for these new economic nexus rules was defining a revenue and transaction threshold. So with that Wayfair South Dakota decision, they established $100,000 in revenue and or 200 retail sale or sales into the state, transactions to your customers. Some of the states, like if you look at Connecticut, they look at it as an and scenario. So it's $250,000 in sales and 200 plus retail sales. Some states look at just the taxable sales. Some states look at gross sales. Suffice to say, the businesses that I've worked with in the last couple of years since this decision, they have, at times went from a small handful of states to having a, 43 state, economic nexus obligation. So these are the types of changes that have really impacted businesses. And again, the states are really working with these to try to increase those revenues by getting new tax collectors in their states. The other piece that's a very similar set of legislation, and you may actually experience this if you have any marketplace type sales, sites like Amazon, Etsy, Walmart, Jet, there's a lot of marketplaces, and the states have really set up rules and regulations that really put the marketplace on the hook to collect and remit those taxes. You, as a marketplace seller, you still may have an obligation to go ahead and report those sales to the state as part of your sales tax return filing, but this has added an additional level of complexity. The reason why we talk about this is with the pandemic, lots of companies went with an e-commerce approach, but a lot of customers went out and said, look, companies like Amazon and Walmart, Jet, they've actually had these marketplaces in place. It's a very easy and development development less effort to go out and actually sell these products through these marketplaces. So this is also something that could potentially create Nexus concerns. If you're doing fulfillment by Amazon, you may actually be storing those products in those Amazon warehouses. That would then put you on the hook to potentially have that Nexus or that substantial physical presence in that state. The state may ask you to register just by way of you storing inventory in an Amazon warehouse. In the Q&A, if this is something that there's additional questions on marketplaces, economic nexus, please feel free to put those into the Q&A console, and we can certainly address those as those come up as well. When we think about consumer use tax or tax that's being assessed on the purchasing side, I do feel like this slide is slightly off in that there definitely is the potential of increased use tax scrutiny, but I will say in my 13 years of doing this with Avalara, there are very few clients that I've worked with where use tax has not come up in an audit. And I think generally the states do this because there's a lot of businesses that I've worked with that prior to the audit, they didn't really realize what their obligations were on the purchasing side. Going through that negative audit, probably having to spend a little money in the form of penalties and interest, and usually the auditors being helpful to let them know what they need to do. Most businesses after that first audit put together a very formal structured process around use tax assessment. But when we think about how complex this has become, more and more vendors are probably charging you tax now based on these remote seller laws. Are they charging you the right tax on that invoice? That is still to be determined as you receive that invoice from your vendor. The other piece on this as well is, depending upon the types of products or services that you're buying, they may not be charging you the right tax based on the type of product or service that you're consuming in the business. When we think about with the pandemic, a lot of inventory has been moved around as part of that as well. So if you have actually assessed use tax on goods, but you then move them to another location, from a best practice standpoint, you should always then be reassessing what that use tax should be when you move that inventory. So this will be yet another increased level of scrutiny as states come in to check your work and make sure that you're doing things properly. I'm not going to touch too much on this slide. There are some states that have toyed around with the idea of, applying some surcharges based on, purchases of personal protective equipment. Some folks are adding, takeout charges, higher delivery fees, or handling fees. So there has been some discussion about, do we want to add those surcharges? And then the big question is, are those taxable or exempt from tax? So I haven't seen any of those become implemented yet, but that is something that that definitely was on the plans for 2021. When we talked about those two holdout states, Florida and Missouri, there is a potential plan to introduce those remote seller laws in these two states as well. I'm not going to read through the content here. If you wanted to take a screenshot of this, this is also something, if you type in Avalara Economic Nexus into Google, we have a whole blog post that's dedicated to understanding these new rules. So if there is the desire to learn more about these specifics, those can all be accessed via our blog at avalara.com. When we think about remote employees, that is also the potential change from a Nexus footprint standpoint. If anyone's not familiar with the term Nexus on the call, this is what states look to say, do you have a physical connection to the state? If you do, they expect that you would register and become a registered sales tax payer. So when we think about the the changes that have happened with no one working in an office for many, many months, a lot of companies have seen employees that now work out of their homes. So if they were previously traveling across state lines, working in an office, they may now be working from remote, or they might have actually moved to a completely new state. So some of the states have actually looked and said, we're going to go ahead and not enforce this new Nexus obligation if this is due to remote employees. So a handful of these that have been listed here: Indiana, Mississippi, New Jersey, et cetera. Likely this is temporary, because at a certain point, if this becomes the new normal, states are going to look at this and say, you have people, you have property in our state, we need you to register and become a taxpayer. So when we look at some of the stats on the right, there has been an immense change in employees going and working remotely. At Avalara, we are almost 100% remote employee base today. So time will tell when that will ease up and we all go back to the office. We talked a little bit about tax on specific goods and services. This, again, is really probably going to impact our audience more on the purchasing side. As you think about your Infor subscription, if you're using a cloud version of Infor, if you have a CRM solution, an e-commerce platform, you may or may not pay tax on those services or those subscriptions based on the state that you're residing in. So there is definitely pieces that you need to consider as you're paying your vendor bills and saying, do we even have to pay tax on this? If you don't, there are then lots of conversations with the vendor to make sure that they're taxing the stuff properly. So while I don't think this is going to impact anybody on the group in terms of what you're selling, I think certainly on the purchasing side, something to be mindful of and keeping track of some of these changes. From a global perspective, there were a lot of countries this year that put forth a lot of, and it was much more long-term temporary relief around VAT. On our blog, we have a whole blog post dedicated to the VAT side of the business. So for anybody dealing with any value-added tax internationally, there has been a lot more support, I would say, from other countries outside the U.S. of helping to extend VAT filing deadlines, or even potentially putting some of the VAT collection efforts on hold, especially in the heat of the pandemic. So again, we do have a site that is specifically geared towards value-added tax. So if you'd like to learn more, you can certainly visit our blog for that as well. So let's talk a little bit about the B2B market and manufacturers and distributors. When we think about what happened with some of the changes in 2020, there were a lot of different ways that businesses decided to go to market. So again, accelerating e-commerce plans, having a B2B portal where folks could come in, make purchases, maybe even pay their vendor bills. The other piece, when we think about what a lot of businesses did, is they shifted the types of products that they were selling. So lots of clothing manufacturers, lots of clothing distributors got in the business of providing masks or protective equipment. So when we think about a lot of the clothing companies that I buy from, a lot of those were adding these different lines of business. So as part of that, they had to figure out, do we need to tax this stuff when we're selling this to a retail customer? As they were expanding their B2B markets, these were certainly becoming very popular products. Same thing with a lot of the distilleries out there. They actually shifted gears from producing alcoholic beverages and started doing things like making hand sanitizer, not only for a revenue stream, but also just to help out with the communities to make sure they had the products that they needed. When we think about what's happening with this, it is creating new sales tax obligations for these businesses. So when we think about some of the sales that are happening out here, new markets are happening based on those e-commerce sales. So businesses are out there maybe expanding their reach of where they're selling to, which then again is putting them on the hook for those economic nexus laws. They then are looking at their footprint increasing dramatically in terms of where they sell and who they're selling to. We've talked a bit about this. I want to highlight a couple of the statistics. When we look at third quarter 2020, there was almost $200 billion that was spent online with U.S. retailers. And that was an increase of about 37% year over year. So when we think about the spike that we always have, around Black Friday, Cyber Monday, that's always a huge spike in business. What we've seen with the trend last year is overall, online sales have just grown tremendously. When we think about why this is important, number one, selling online is a simple concept, but there's a lot that goes into, number one, making your customer base aware of those changes, and this is now an available option. So thinking about, social media advertising, thinking about search engine optimization. There are a ton of efforts that go into getting a product online. Then you think about the technology effort of implementing either a fully custom, homegrown solution, or maybe something that, a systems integrator might build for you from the ground up, or purchasing a platform and actually implementing that along with your ERP. Those are the types of projects that really took priority last year, and ones that gained a lot of steam based on the way that folks were buying products. When we think about the other piece on this, a lot more markets have opened up due to this e-commerce growth. Businesses that were traditionally focused on domestic selling now have really increased their outreach and are now selling internationally as well. With that comes a whole nother set of obligations. Not only do you have to worry about things like VAT or GST type taxes, but there could be custom duties, there could be import taxes, there could also be tariffs depending upon the types of products that you're selling. So in seeing that international growth, there are a ton of barriers to international commerce that companies had to think about last year as they were making these transitions. So overall, I think more and more people are being, in tune with buying online, whether that be through marketplaces, whether that be through your sites as well. So we will continue to see that growth here in 21 without a doubt. So how does this all get managed by these businesses? So when we think about what companies do around tax compliance, there's generally a couple of paths they can take. One is they just do it completely in-house with their staff. Number two, maybe they work with a trusted CPA or tax advisor on coming up with that tax policy. Or three, they may use a technology solution like an Avalara. Now, I will say what's very popular in the market today is a combination of both item 2 and item 3, working with a trusted advisor like a CPA or tax consulting firm, but then also automating that policy via technology that's integrated directly within your billing systems. When we think about tax technology and the path forward of how to manage all this, one of the things that we always want to highlight is a program called Streamlined Sales Tax. This is a group of about 24 states that have got together. This program has been around for a really long time, but it's become a lot more popular in the few years after the economic Nexus rules have went into effect. When we think about the SST program, this was originally designed to give states some leverage with the federal government to say, we feel that, as the states said, they feel that there's an easier way to manage compliance instead of using people to do it. It's much more affordable, it's much more efficient, it's much more accurate. So their play on this was get enough folks to join this SST program and automate via technology providers like Avalara. They could then go to the federal government and prove that they could start asking more and more businesses to actually start collecting tax if they were doing remote sales into the state. What threw a big monkey wrench into the SST program was the Wayfair versus South Dakota decision. So from that standpoint, South Dakota had the Supreme Court case that said, based on the fact that these companies are selling a lot into our state, they now have the ability to ask them to start collecting taxes. What SST doesn't look at as part of their qualification is economic nexus. So when we look at joining the SST program as what's called a volunteer seller, they look and say, do you have, a fixed place of business for more than 30 days? If you do, you don't qualify as a volunteer seller. Do you have more than 50,000 in payroll or property in a state? If you do, you don't qualify as a volunteer. If you have less than 25% of your total property or payroll in that state, you certainly would qualify as a volunteer. What that means to you as a business is if you join SST, if you use a certified service provider like an Avalara, you can easily register with one form to turn on up to 24 states with that one registration. So it makes it very easy to get into those new states very easily, very quickly. The other piece, which is probably the biggest benefit of SST, if you're a volunteer collector using a certified service provider, you have full audit protection under SST. So if you were using Avalara, state of Washington came in to audit you, you would tell them you're a volunteer seller, Avalara is your certified service provider. SST would then in turn go in and they would audit Avalara. The other big one as well is there's some financial benefits that you get in the form of some incentives of not paying for some of the services in those volunteer states as well. So as you think about automating tax with technology, SST is a program that you could certainly look into with some additional benefits. Future of this program, the goal has always been for SST to get more participating member states. There are some states like Pennsylvania, Connecticut, Illinois, New Mexico. They're working to create their own SST type programs with that concept of using a certified service provider. So we do feel that the number of SST states may increase, or states out there will create their own SST like program to help benefit businesses and make it easier to collect in their state. So let's go to polling question number 2. Gloria, if you wouldn't mind sharing that question for us. And the question for the audience is, how are you currently managing tax compliance today? And the answers are either in-house, you use a tax professional, you're using an automation platform, or you're not doing it well today. Hopefully, nobody is in the fourth category here, but we'll leave the polling question up here for a minute. And don't feel bad if you're not doing it well. Most of the businesses that I've worked with in my time at Avalara, they have some good processes, but almost every business, whether it's enterprise or startup, there's always been some gaps where there's some things that could use some improvement. So don't feel bad if number 4 is your answer there. So we'll leave the polling question up here for just a couple more seconds to make sure we get some good participation from the audience. And Brent, are we doing okay on Q&A at this point? You're gonna just give me a thumbs up.
Yeah, we're good on
Okay.
Q&A. We've got some stuff that we can address toward the end here. But thank you.
Okay, fantastic. So here's the polling results, everyone. So again, how are you managing tax compliance? More than half of the group, about 52%, is managing it in-house today. About 14% is using some type of a tax professional, CPA, tax consulting firm. About 33% is using an automation platform. I'm happy to report 0% of the audience thinks that they're not doing sales tax well. Thank you very much for sharing the second polling question. So let's dive in a little bit and talk about technology and automating this process. So when we think about what we built at Avalara, we're a cloud-based sales tax engine. So the idea is we're going to store all of the tax data in our cloud. So this orange Avalara cloud on the screen, that's where we store sales tax rates, sales tax rules, and the jurisdictional boundaries. As we turn this on in Infor and we integrate to most of the Infor platforms today, we also integrate into eCommerce, CRM solutions as well. But as you turn this on, all that the system will do is send from Infor the transaction elements that we need to calculate tax. And as you create that order or invoice within Infor, in real time on demand, we will calculate and determine those taxes for you appropriately. This all happens in sub-second time. It's all done via secure connection and encrypted files. But as we determine that tax for you, we're also going to produce about 55 different sales reports for you, sales tax reports within the Avalara portal. So this will be something that you'll look to Avalara for any of your sales tax reporting on a go forward. When we think about the manufacturing and distribution space, the second piece that we do a ton of help for customers on is actually managing their exemption certificates for their businesses. So if you're selling to a new exempt entity, we have some ways that we can help you to collect that certificate in a very automated and efficient way. We give you the ability to store a image of that certificate, a digital copy of that certificate in the cloud. And then we also give you a multitude of reports so you can stay on top of things like expirations, or let's say every 2 years you want to refresh those certificates. We give you some ways to go out in bulk and request many certificates from multiple customers, depending upon what that reason would be for getting that new certificate. So this is really geared towards the B2B side of the business and helping you stay on top of those certificates. The last piece that we help with is really filing and remitting the sales tax returns. So instead of you going out, paying each state individually through their portals, filing the returns online, making those payments, instead it would be a single point of remittance to Avalara. So there would be one treasury event. You would pay us that total liability for all the states that you owe in that month. We would then go out, we would do the heavy lifting. We would pay those states on your behalf. We would file those forms with all the details required as well. When we think about the 3 areas that we help with, these are the core 3 pieces that we help with. The other piece that we also have, which is a newer version of this product, is we had talked about the consumer's use tax on the purchasing side. We also have the Avalara consumer use module that helps to assess and accrue any purchasing or consumer's use tax that you're dealing with in the business as well. Couple of resources that we have for you. We talked a little bit about some of the blog posts that we have online. We do also have a couple of really helpful risk assessment tools as well. So these risk assessment tools would really address economic nexus. All that you simply have to do is plug in some numbers to these tools, and it will pop out a result to help you understand, do you potentially have some obligations that you may not have known about previously? We can then certainly talk about the path forward and how we could maybe do that for you in the future as well. We do have a tax advisory team. So if you don't have a CPA or a tax professional that you work with, we do have some folks here at Avalara that can help, and we can certainly go through and give you some guidance on where you may need to collect and remit. Last thing that I'll talk about too, we work with most of the Infor VARs out there in the space, or Infor channel partners, you may know them as. So if this is something that you would like to have some more formal conversations with us, we certainly would love to connect through either direct or through your partner and set up some time to chat and see how we might be able to help. What I will say is, from a next step standpoint, we're very understanding that this may not be a path forward for everyone, but we are more than willing to have some conversations, share best practices, help to really educate you on what these new laws look like. So the goal of this first conversation would be, even if you don't pursue a project with us, we'd love to still help bring some clarity to what that impact might be for the business. You would walk away a bit more educated, hopefully, out of those initial conversations. I think the next thing that we were going to talk about here was going to be Q&A. Brent, do we have any questions that have come through the Q&A console that we might want to bounce off the group?
Sure. We've got one here, and it's a simple question. It just asks if there's anything that they need to change in their Infor system before using Avalara.
No, and a lot of this depends. There are some of the applications like M3 and XA that are a little bit more customizable. Thinking about, if you're using a cloud-based version of Infor, almost nothing is going to change as compared to your current processes today. Depending upon, sometimes folks like to run some address validation tools. That way they clean up their addresses, get some really good ship-to addresses that'll be populated back in the system. But from an overall perspective, no, there's really nothing that needs to change. If you're using a cloud-based application of Infor, most of our integrations are just built right into the code. So it's a matter of, either a quick install of a small piece of software or inputting your credentials in the application. And we can certainly talk more about what that would look like depending upon the version that client's using.
Very good. That's there's only one other here that I'm seeing, which is, I think, could probably apply to most folks here on the call, which is, what do you see most distributors struggle with when it comes to compliance?
Yeah, I think it's I think it's a variety of things. I think most businesses in general struggle around use tax. Where I think that's not a struggle is, I'm paying my vendor bills, there's no sales tax. At the end of the day, it's very simple to manage some of that stuff. When we look at the big challenges around use tax, if you're giving out lots of free samples, if you're moving lots of inventory around in a very frequent fashion, there's a lot of reassessment that needs to happen when those types of activities happen. The two big ones that I think most manufacturers and distributors struggle with is, if they're traditionally doing B2B sales and they jump into the world of B2C retail and or B2C retail e-commerce, going in and really learning from the ground up what needs to be accomplished is a very daunting process, especially when we look at businesses that are in multiple states like that. The other one that, just depending upon the distribution method and kind of what distributors you're working with, if you're working with hundreds or thousands of distributors, keeping track of those certificates and being able to timely produce them in an audit, that's just a genuinely tough challenge for most businesses to manage. The other one is, if you're in states where those certificates expire, keeping track of that and having a good customer experience for getting that new certificate from your customer, that's really an ongoing challenge as well.
Thank you. We actually have another one. I was typing an answer live, but we could probably talk to it quite quickly. The question was, if we do not charge sales tax in a state that we should have for a few months, what would be the best way to come into compliance? which I was just typing a little bit about voluntary disclosure agreements. But if you want to go ahead and chat to that, please feel free.
Yeah. Well, and that's definitely you're super on the right track with that, Brent. When I think about this is a big it depends question. If you've been a couple months in a state, let's say you hired a new employee, you haven't registered for sales tax yet, and you've made a couple $100 in sales, most businesses would look at the risk on that and say, well, if the state asked me to pay something on the way in, if it's penalties on $200 in sales, I could write a check for that pretty easily. Now, if it's been 6 months, 8 months, a year, 2 years, you've done a couple $1 million in sales, probably not a good idea to just go in and get registered. The states would look at that and say, okay, as you're registering, they're going to ask you, when did you trigger Nexus in that state? And they would expect you to be honest whether it was physical or economic Nexus. If you're truthful and you said it was, a couple years ago, they're immediately going to look and say, great, why haven't you been collecting and remitting taxes for the last 2 years? What most businesses would do in that scenario, they would either hire a tax consulting firm, CPA firm, companies like us at Avalara can do this as well, but they would perform a voluntary disclosure on your behalf, which means they would go in, they would file a VDA that would essentially say, we are knowledgeable of a taxpayer that has shirked an obligation. We want them to become current, but they would then negotiate things like look back periods, penalties, and interest as well. So the idea is come in a way to show what you owe, have a firm that's going to negotiate on your behalf the most affordable entry. That way, you're not going in, getting caught by the state, and then having, six-figure penalty, based on the couple of years that you might have been doing business. I think with that, we're just at about time here. So Brent, thank you for helping with the Q&A. And Gloria, I'm going to pass this back to you to go ahead and wrap up.
Well, thank you so much. Appreciate that. Let me just get on over here
Gloria,
myself.
we did have one more question that came through in the chat. If we have a moment, we could address that as well.
Absolutely. Do you want to go ahead and read that, or would you like me to read that for you, Brent?
Sure, I've got it. So it was from Jeff Howard, and he says, for users that are interested in Avalara, there are tools available from Avalara for address cleanups for ship-tos.
Oh, Jonathan.
Correct. Yes. Correct. So when we think about what we do as part of the tax determination, we actually do an address validation to establish a lat long coordinate of that customer that you're shipping to. So we use it as a means to an end to get a very, very rooftop level of accuracy around that tax call. But what we also do is we use a USPS approved CAS certified database. So in most of the integrations with Infor, not all of them, you do have the ability to standardize and correct that address as part of the call to Avalara. So if I was setting up a new item in a new customer in the customer master, I could type in that ship to, I could validate the address against that CAS certified database and come back with the USPS approved format for that ship to. So that is something that's present in most of the Infor integrations. But again, we use it as a means to an end to get a very accurate tax. You could use it as a customer to get a very accurate ship to really limit the number of chargebacks from UPS, FedEx, USPS if that address was improperly formatted.
Very good. Thank you. That does it for our questions. So you can take back the host there, Gloria.
Thank you, Brent. Thank you, Jonathan and Brent, and all of you that have logged on with us this afternoon. And also, quick reminder, if you have any additional questions or want to continue the conversation, that's exactly what our member exclusive forum boards are for. And we know that Brent and Jonathan will be checking those also to jump in and answer any more in-depth questions that you might have there as well. And also mark your calendars and keep an eye out on your inbox or the community boards to register for next Tuesday's event on eCommerce 2021, State of the Roundtable Discussion. The TUG Connects 2021 registration is live, so make sure that you register. And for those of you who are not yet members, join, because that will qualify you for the member rate. Thanks again, gentlemen. And as they say in Hollywood, that's a wrap.